We're here to talk about technology in the commercial real estate process today. And I'm Nate Levin. I used to run venture investments for First American, which is the second largest title insurance company in the United States. Our group, Parker 89, had a bunch of investments in proptech. And then I also worked with a lot of the incumbents in the space, which is great for this panel because we're joined by a mix of incumbents from bigger real estate firms as well as a disruptor in the space or a newer entrant. So I'll let each of them just quickly introduce. We'll just do name and company for now, and then we can jump into the next question later.
I'm Carrie Denning-Jackson. I'm Director of Innovation at Jamestown LP.
I'm up next. Mike Sroka. I'm the CEO and co-founder of Dealpath.
Hi, I'm Scott Dunphy. I'm a fund manager at MetLife Investment Management.
And I'm Jean Casey. I'm the head of proptech and innovation at Nuveen Real Estate.
So in this panel, we'll talk a bit about how technology is used in the transaction and managing a portfolio of commercial real estate properties. And to start things off, though, let's just go down the line and quickly get a sense of what your role is at your company. What does that actually mean? And then why you joined your company.
Sure. So I'm at Jamestown. I'll just very briefly on Jamestown. We're a global real estate company. We have about $13 billion in assets under management, and we're known for assets like One Times Square and Pond City Market in Atlanta. I head our innovation team. My main job is to pilot and roll things out in the portfolio. And one of them is the Work and Mother group, which is right there. And it's really fun and rewarding. I came to Jamestown from Sidewalk Labs. I was there for about 5.5 years. It was Google's urban innovation arm. And while working there, we often looked at real estate firms that we really admired and thought about how we could bring some of their innovation and knowledge into what we were doing. And so I always admired and loved Jamestown's work.
For me, I guess I started my career in real estate private equity at a big distressed fund and kind of unexpectedly got pulled into software development and have now been building venture-backed software companies in the Bay Area for almost 2 decades. When I look backwards, I guess now building software for real estate investing makes a lot of sense, but that wasn't really a planned progression. It really happens just through chasing opportunity. And I guess that's what really brought us to starting Dealpath, is that we saw a big underserved market with the institutional buy side that didn't have purpose-built tools and a lot of inefficiency in the work that was being done. And would credit former colleagues and friends that were really persistent in describing their challenges that really kind of drew us to building this business. We've been at it for 9.5 years now and very excited to continue compounding growth. The opportunities just get bigger and more clear. And look forward to the discussion today. Thank you.
So I joined MetLife about 10 years ago when they were launching their investment management business. And if you fast forward to today, MetLife Investment Management has about $100 billion of commercial real estate investments. About 40 billion of that is real estate equity. So as a fund manager, I'm responsible for developing and implementing the fund strategy. But then I'm also heavily involved in our data technology and AI initiatives that help scale our portfolio and operate efficiently.
I joined Nuveen Real Estate about 2 years ago to launch the proptech and innovation team. And we have a 2-part mandate. So on one hand, we are making direct venture capital investments in early and mid-stage proptech startups. And then on the other side of our mandate is connecting the best teams and technologies and companies we're seeing building new things to the right places within our organization. Nuveen's really large. We manage about 150 billion across the world, across every major real estate sector. And I joined actually from a career in venture capital to really learn about the real estate industry from the inside looking out, instead of just the venture lens, kind of the outside looking in. And there's been a lot of learning the last 2 years.
Yes, lots of volatility. So I guess to get started, let's baseline kind of where we are today in tech adoption, commercial real estate, both from on one sense, a transaction perspective, and the other sense, portfolio management perspective. Maybe Carrie, you can start us out on that.
Yeah. So I would say, I know the whole point of view is that real estate's behind. But you go to conferences like this, and there's a ton of people and a ton of amazing stuff going on, and innovation from AI to foot traffic data to sustainability. So I find it to be an incredibly exciting, interesting space. And even with the economic headwinds that Gene just remarked on, with constraints, you get creativity, and there's a lot you can do, whether it's OpEx savings or, again, using data to drive decisions. That is still exciting, and there's a ton you can run with.
Where have you seen tech effectively adopted today in commercial real estate?
So many different areas. If it's measurable for our ESG work, companies like Placer or Marker that we use for foot traffic and consumer data, access control, parking. I could go on. Our head of property management sent me a video this morning of a company in Atlanta that uses drones to clean facades of buildings. I think it's everywhere, and it's not just software, it's hardware too.
Makes sense. Mike, like on the transaction side of things, where have you seen kind of the biggest leaps up to this point? And are we in a good place today, or is there more work to be done?
I think we're still very much getting started. And, just for a reference frame, if we look back 8 years ago, real estate software services was pretty much a cottage industry. There was a few very large incumbents that had been used for decades, but not a lot of innovation, and certainly not a lot of stuff happening. We've seen this, explosion of development to the tune of tens of billions of venture dollars and hundreds and now thousands of different point solutions coming to market. And I do think that pre-pandemic, we were really starting to kind of hit the adoption inflection point, going from early adopters into an early majority on its way to a mass market adoption. I think that the pandemic and the reopening have been accelerators in that digital transformation. It is belated, and it's happening in a very accelerated way. And I think that, the reason for that is that we've had these shocks to the system, different ones for sure. But those big changes have really forced people to confront things that were kind of percolating beneath. And so as we've had big changes in the valuation of property, as we've had changes in the way that we work and collaborate with our colleagues, it's really put a spotlight on some of those pain points and driven that change management that is so tricky. We're still in the very early innings here, with a lot more work to do and a lot more value to unlock. But I think that this conference is maybe a great recognition of that. I remember just 3 years ago coming to the first Blueprint. Year over year, the growth has been extraordinary. And that is a good sampling of what's happening in what we now call proptech.
And if I can add to that, and I wasn't paid to say this, but Dealpath has really changed the way that we do our transactions. Because 5 or 6 years ago, pre-Dealpath, we were really tracking about 7 to 10 different data points on our acquisitions, when we were screening deals. And data is now a competitive advantage for any firm that's trying to build an AI platform or a machine learning platform. And now that we've implemented Dealpath, we're probably collecting 30 to 40 data points on each property at screening or at ingestion. And that's even before we start doing full due diligence. And so we're now building this really rich database that we think will be a competitive advantage as we do transactions down the road, whether it's, to figure out what are the best comps, where have we done deals before, where have we worked with brokers before.
Makes sense. Yeah, you kind of have to have clean data sets and, organized data sets in order to get much out of automation and some of these other, and then AI, which is coming up now, obviously a big topic. With generational AI, you can actually create new content from scratch versus kind of the AI we've had for the last couple of decades. How has this new form of AI affected how you look at proptech space and commercial real estate, and within your businesses? Has it changed the types of things you're investing in, the types of projects you're pursuing, and what do you think the potential is there?
I think the potential is really huge. I also think we're peak hype cycle right now. which I think is consistent with a lot of what we've heard over the last 2 days. But the potential is huge, and for large companies like Nuveen that are owned by even larger and more conservative companies like TIAA, we are experimenting, but have not given access broadly to tools like ChatGPT because of the compliance and legal implications of sharing potentially confidential information with tools like that. The right kind of guardrails need to be in place before we roll something like that out or deploy a tool at scale. But we're certainly starting to experiment in controlled environments, and that's starting with our IT department, and they're prioritizing use cases, starting with like public data and information, and then slowly I would expect towards like 2025, we'll hopefully have tools more widely available. Curious what your guys' organizations are doing in that vein.
It's very similar for us. We're a large institution. Data and privacy, comes first before anything else. But we are moving as fast as I've ever seen our company move in terms of implementing technology. So AI is coming. Well, it's here. Many of our vendors, I think, will start implementing it far in advance of when we do at kind of a corporate scale. So I know Dealpath is working on some AI technologies that I'm personally very excited about. AI investment memo generation will significantly save time for our acquisitions teams. That will then allow them to screen more deals and be able to scale our business. So that's kind of what we're seeing.
You go first, Carrie.
Okay. So it's been really interesting. In the past few months, I've switched my mind share from focusing mostly on the assets to probably 40 to 50% of my time working with our IT, legal, and compliance to bring various, whether it's automation or Gen AI into the company. We have similar issues where, you have SEC rules. You can't share data outside. You need things to be auditable. So we can't even use the OpenAI enterprise ChatGPT right now. That said, we have our own integration with them. So there's a lot to be done. And then there are also solutions in the market that use AI, use Gen AI. So, we're using BetterBot, which has a Gen AI chatbot to help prospective tenants learn about, a multifamily building they might live in. So there's a ton of stuff going on, but it is hard to thread the needle with legal and compliance, definitely.
It seems like from a large company standpoint, you're in a good position with Gen AI because generative AI, I may have said generational AI before, but generative AI, because you've got distribution networks, you've got assets already that you can apply it to, and you can cut out costs there fairly easily. Whereas like a new company coming to the space, you've got to build those distribution networks. You'll probably have less of an immediate impact on your business. I mean, would you say that's true or?
Yeah, I might jump in here, which is that maybe. And I think that's a function of your data strategy and the cleanliness and hygiene of your data assets. And you could be a very large firm with tremendous data sets that you're able to leverage immediately. You could be a smaller firm that doesn't have as big of an existing data set. However, it's organized and structured really well, and you're processing information on a daily basis that you're able to utilize. So I think that maybe that's the exciting part, is like how broad the applicability is. It really is for everyone. And right now, the new hotness that we're all talking about is generative AI. And there's a lot of exciting things about it that I'm sure we'll talk about. I think that what we now call like the legacy of predictive AI is also, it's technology that's been used for decades, but it is underutilized in real estate. And there's a lot of value to be had. Regardless of a generative AI or predictive AI, a lot of this is just about automation. And I think that for most clients, they don't really care what it is. They just want it to work. And so we get a little bit too hung up on the technology itself. And I think really focusing on the pain points or use cases is maybe the best place to start. Now, I do think that with these data strategies, with AI in particular, we're kind of going through our Napster moment. And what I mean by that, and by the way, I'll credit Jason Bomig at Ironclad for describing it that way. What we're doing in generative AI today, I think, has captured the imaginations of many, but it's also like pretty blatantly like illegal. And so the information that is being used to train these models isn't exactly, the owned assets of those large companies. We still need to figure out what the business models are that will be realistic for the longer term. We still have a lot to iron out on the cost structure, because while there's lots of fun prototypes that we can demo, operating at production scale is extremely costly, and something that we're all still trying to get our arms around. So I think that there is a lot of opportunity, and now I think more excitement. Generative AI has brought these tools and capabilities to everyone. Something that I heard Scott say on a panel a few weeks back is that AI will be the success of 1,000 innovations. I agree completely, except we might add orders of magnitude, where all of us individuals are finding uses for it in our individual lives and business work. Teams are starting to leverage it more broadly. Companies are challenged with how they can control and utilize it in a compliant way. And that is happening very, very fast and hugely exciting.
When do you think that Gen AI will, for example, like be able to underwrite a new acquisition all on its own without too much human involvement? Is that like 10 years off, or is that shorter?
I would follow Scott Dunphy on LinkedIn.
There is a company right over here, Smart Capital, that ostensibly does that, and I'm going to be demoing with them soon, so that might be something interesting, but hopefully soon.
Yeah, one of the problems is that one of the big valuation vendors that all the large institutions such as ourselves use, and particularly the funds that mark their assets every single quarter, we all use the same software. And until that software evolves, and I won't name their names, I think you guys can probably figure out who they are. Until their software evolves, we won't be able to get to automated underwriting. But I'm hoping that eventually they do evolve so that the industry can evolve. And I think 5 to 10 years from now, we will have some level of automated underwriting, but with all of this AI and machine learning, I think humans will always remain in the loop. So AI may do a cursory review that kind of narrows your funnel, but that's when the humans come into the loop and they start doing the full underwriting. So that's my hope.
So moving on to the market, obviously commercial real estate is having headwinds at the moment. Residential started last year. It's now it's hitting the commercial space from a transaction volume standpoint. I think we're about 70% down from the previous highs of last year. How has that been affecting your businesses, and has it affected tech adoption or the enthusiasm for tech adoption or investment in your businesses?
So for us, there's been a two-sided coin. So on one hand, obviously, slow transactions is not great for a real estate investor. But from a tech adoption and experimentation perspective, there's such a heightened focus on managing those assets and squeezing any sort of operational efficiencies that we can possibly get, technologies that potentially enable new revenue streams to the extent that is possible. Like, we are down to look at all of that. And there's a lot more mind share available in the form of human capital, not necessarily budgets, which are pretty tight right now. And I would say that's probably pretty consistent across many of our large real estate firms. But there's a lot of human capital. Those folks that were on deal after deal after deal are freed up to work on some of these initiatives, be internal champions. So I see it kind of as a double-edged sword, or two sides of a coin, with some green shoots of there's more mind share available for new things.
Yeah, I mean, it's certainly not a good time to be a real estate investor, but I mean, the times I think are going to start getting good because it seems like maybe interest rates are starting to peak and prices have reset. So it should be, a good time to start finding deals in the market. So while we're not actively buying right now, or at least not very actively buying, we are taking this time to kind of clean up our data and, get it ready. And as I mentioned, we are building a database of all the deals that we see in the market, whether we pursue them or not. And AI is definitely helping with that.
I guess from our perspective, what we're observing with our clients is while there's fewer transactions being consummated, very interestingly, there's a lot of people in the market, both interested buyers and sellers, that are I guess, struggling to agree on pricing. So this is a little bit different than other cycles that we've seen. So
it seems like data is even more important now from what you guys are saying.
I think that that's true. And, we can talk about maybe the changes in use and what the highest and best use of different properties are. But at the end of the day, like, underwriting is tricky right now. And the cost of capital has changed dramatically over the past 12 to 18 months. So with that, I think that, people are trying to figure out what their portfolio is worth, what other assets are worth. And there's a lot of effort going into that understanding, which is, I think most effective when it's data driven. Another data point, just in terms of like timing, is that historically peak bankruptcy has been 12 months after the Fed starts reducing rates. We have not started that time clock yet. We are still, perhaps increasing rates. So I think that what we heard early this year was hope or expectations that deal volume was going to pick up the second half of this year. Today, right now, I think we're hearing like, 2024, maybe the second half of 2024. That would still be kind of ahead of that typical cycle timing. And, while I think that there's a lot of important work to be done in between, we might not actually see, that real rise in value, that real rise in transaction volume until a little bit later.
Another shoe to drop, so to speak. So what about from a business model standpoint? Like, obviously, transaction-based business models are tougher now. Is that, as a deal flow software, like, how have you designed your business model and how's it working out?
Boy, a couple of years ago when things were heady and people were paying high prices for trophy assets, I think that our per user license subscription model was having envy of not participating in the transactions. Today, on the other hand, we're feeling quite lucky that's not our business model. So I think it just depends. But at the end of the day, we do still have a significant volume of dollar activity. If you look back on a 10 or 15 year basis rather than just the past 5 years. And it feels inevitable that there will be an increase. Time frame TBD, and I think that this is the important work over the 12 to 18 month time period where we try to reconcile what the right pricing is and reestablish a more liquid market.
We think of Dealpath as an acquisition tool, but are people using it for dispositions as well?
Yes, and boy, I'm appreciating the attention here. I like this. But we do support.
We're all picking on you because you're the startup.
Thank you for that. We support acquisitions, dispositions, development projects, and financing. And, we do get to kind of see across the landscape. And so during different time periods, we saw 7, 8, 9 years ago, a lot of activity in industrial and logistics, not because that is necessarily our particular specialty, just because e-commerce was driving so much need and activity there. Shortly thereafter, we saw a lot of activity in affordable housing development because of the lack of supply. Pre-pandemic into the pandemic today, we see the most capital formation and the most activity on the debt side. I think we thought pre-pandemic that was indicative of where we were in the market cycle and that institutional investors were seeing the most compelling risk-adjusted returns being higher in the capital stack with more protective provisions. That seems to continue today.
So I want to talk for a second about where the most innovation in commercial real estate is going to come from in the coming years. I mean, commercial real estate, I think of as a tougher space to innovate in than residential because you've got a lot of bespoke transactions, a lot of human capital involved kind of in each decision that you're making. Bigger transactions are obviously even more bespoke, right? And those are the real revenue drivers. A lot of the small cap stuff tends to be distributed and fragmented. Do you think that it's going to be the big companies and the big players who are driving the disruptive innovation in this space and use of technology over the next 5 to 10 years? Or do you think it's going to be, new companies that are starting out from scratch?
I think that's a really hard question. I think it comes, for the newer ones, I think it comes down to a lot of leadership and how well they know the real estate industry. You can kind of notice where their foot faults. But I think you mentioned it, there's so many point solutions. And while they're great and they're much easier to implement from my perspective, it's really challenging because then you have a million different softwares. They might not necessarily connect. You're dealing with all these APIs. So to your question on what, I think it really depends on the leadership of the company. How innovative is the company? Is it a big behemoth that's going out to acquire, and can they absorb that company well? I don't know. But at the end of the day, we need more consolidation and less of the point solutions.
Gene, what about from your perspective?
Taking the question more from like a startup versus large incumbent real estate firm perspective, I think it's got to come from both sides. I think the true innovation is going to come from the startup world, but I think from the large real estate companies like represented up here, the willingness to work with earlier stage companies and help inform those product development cycles, and the fluency to be able to speak to tech teams and founders in the startup community is going to be absolutely critical. And then, of course, the adoption piece and making sure the education is there for the rank and file to actually use these tools, because you've always got kind of the people on the cutting edge that are really interested in learning something new, but that doesn't necessarily trickle across the entire organization. So I think it's a bit of a cultural shift, and I'm seeing a lot of exciting examples of larger companies engaging earlier in a startup's life, including my own. I think even in the last 2 years that I've been a part of Nuveen, we've gotten much more comfortable as an organization engaging with like a seed stage startup versus even 2 years ago. We were super psyched to work with Mike and team, but you guys have been around for a while. You're more or less a household name in our world. And so that's an exciting change, I think, is going to be important to innovation or unlocking the next wave of innovation.
What are some of those ways that, like, as a bigger corporation, I mean, you're global head of proptech, like, what are some of the pieces of advice you give to other people at Nuveen and how to engage with early stage companies?
They work on very different timelines. So I think managing expectations, and I coach startups to really learn who you're actually selling to. So very often, whose budget a tech solution is going to come out of is not necessarily the end user, and is certainly almost definitely not the decision maker. So those might be like 3 different parts of the organization that you really have to understand who is making what decision, but who's then going to actually use the product. And so having enough conversations to really suss that out, I think, is pretty critical.
And Mike, from the startup standpoint, like, I assume you think that startups are better suited to innovate, but would love to hear your thoughts on that.
Yeah, that's tough. I think that there's like a lot of opportunities, and that there's kind of benefits and drawbacks to each side. When you've got scale, it's a much different game than when you're an earlier stage company. So I think approaching it from different angles, and sometimes that's complementary, and that's oftentimes where kind of the magic happens. I guess I do think that for real estate investment management, there are these very clear economies of scale, and in fact also benefits of lower costs of capital that is almost like gravity, that the assets and the value is going to continue to kind of congregate and aggregate with those larger pools of capital. In order to raise and deploy and return on billions of dollars, you have to have purpose-built tools and solutions. Those haven't really existed before. They're being built before our eyes. So that is really what is driving this wave of investment and innovation in what we now call proptech.
Makes sense. I guess one kind of last question, just to go down and hear from each one of you. It feels like, sure, we're at a difficult time in the capital cycle and transaction cycle, but there's a lot of ideas and economic opportunity around new technology innovations in commercial real estate right now. If you were going to go start a company, and in your case, start a new company, Mike, what would you start and why? Maybe Carrie first.
I really like this question. And I had to think about it for a while, but one of the things I love to work on is on the data front and data around our assets. So who's coming, what's their spending profile, what's the foot traffic, all of that stuff, time of day, time of week, everything. And that's very much on the macro, like, how many people coming to Chelsea Market came from New Jersey versus came from Florida. And so we understand, is it a regional or global, that kind of thing. But then we also have tools that are, whether it's video systems or beacons or whatever it is, to collect information on site. And so I would personally love to create or see in the world a tool that can knit those together so I can see the full funnel of who's coming to the asset, where they're going on the property. And just another nuance is that with the cell phone data, we don't have insight into anyone outside of the United States. We cannot collect that data. So getting the on the ground is also a great way to kind of pull it together and get the holistic story. So I would do that.
How the buildings are used and such.
Who's coming? Where are they going? Are they coming in this room or that room? Are they going to Gap before Anthropology? Like getting that full sense of what's going on at the asset.
What would you call your company?
I don't know. I have no idea. I'm sorry. Come back to me.
I can come back to you.
And sorry, that's unfair. This is more for retail. It's not really commercial. Sorry.
Mike?
Well, we have decades of work ahead of us at Dealpath, but for variety, I'll offer something different. I think that if there was going to be another business, it would be an infrastructure and renewables play called Mopoco, or Moon Power Company, that would generate clean, renewable electricity, harnessing hydrostatic pressure driven by lunar gravity. I want to build a big pipeline from the Pacific Ocean to the deserts here and move salt water back and forth to drive turbines.
Very different direction. Scott?
I would build the everything app for real estate. So as we discussed, and as you've seen, there are a lot of different startups and companies out there that do a lot of different things, but a lot of them complement each other. And I saw many of those yesterday where I was like, that company should merge with that company because they would work really, really well together. And so I would build the company that just connects all that stuff. So people like ourselves and others in the audience have just a one-stop shop for all of their real estate technology. And we can stop having 20 different tabs open on our Chrome browsers.
Awesome.
I'm going to go something in like the education space, meaning like for people who shy away from using the technology we have available, how do you maybe use AI or a co-pilot to let them know actually what tools we have and how to use them instead of taking a lot of manpower and time from our IT teams doing kind of like education sessions? Not the sexiest company, but I think really necessary.
I feel like there's a lot of institutional knowledge, especially in commercial real estate, that is locked in people's heads. And like, if you could find a better way to disseminate that in an organization, that would be helpful.